Hello everyone, my name is Siddharth Srivastava. I am head of ETF Products at Mirae Asset AMC. And today we are here to talk about some of the nuances about exchange traded fund. And in this video, I'll be talking about things which investors should consider before buying and selling ETFs. So the most important thing first of all is to know that the investment objective of yourself is aligning with the ETF. So for example, if you want to invest in a large cap broad based ETF, you should probably look at Nifty 50 ETF or Nifty Next 50 ETF if you want to invest in smaller large cap companies, or Sensex ETF. Whereas if you are looking in a mid cap category, you should look at mid cap 150 ETF. If you're looking at a strategy like value, you should probably look at Nifty 50 Value 20 ETF. So there are almost 100 ETF in Indian markets, and different ETFs have different investment objective and they provide different sort of exposure. And like any investment products, the most important thing is to align your investment objective with that of the fund. So first of all, you should shortlist the ETFs which is aligning with the investment objective. For example, as I mentioned, in case you want to invest in a large cap space, there are select ETFs which provides you that exposure. Now, once you have shortlisted the ETF, there are several things which you should consider before clicking buy or before clicking sell. I assume that you know that exchange traded funds can be bought and sold on exchange based on intraday pricing levels. And typically, this mirrors the intraday movement of the underlying exchange. So for example, if Nifty 50 is down by 1% at 12 noon, the ETF should also be available at a price which is lower by 1% compared to yesterday's closing NAV. And this is what makes ETF very different compared to index funds or mutual funds, which you can only buy at the day close NAV. And since you are buying ETF on the exchange, you should also think about liquidity. You should also think about whether I'll be able to sell this ETF going forward on the exchange. So I'll talk about a few of these points one by one. So one of the most important thing is to see whether the ETF is available on the exchange at the right prices or not. And that you can check by going on the AMC website, and most of the AMCs publishes real-time net asset value or the value of an ETF on a real-time basis. So suppose an AMC is saying that its Nifty 50 ETF is around 150 rupees in terms of INAV, you should be able to see the similar prices of the ETF on the exchange. And if you're not seeing it, basically that ETF is trading at the incorrect prices. First is that you should first be aware about the right prices of the ETF. Second thing is liquidity. You should look whether the order book of the ETF is healthy enough or not. By order book, I mean whether the number of buy codes and the sell codes are significant enough to take care of your order. And you can simply check it on your broking platform also, or you can go on the exchange and check it. And if the order book is healthy, it means that the ETF is liquid enough and will be able to take care of your order. And finally, you should go to your broking account, put in the limit price, and then click the buy order or sell order. So for example, if the INAV of the ETF as per the AMC website is around rupees 150, you should put a limit order of around rupees 150 while buying and selling the ETF. And this ETF, as I mentioned, you should be comfortable with the liquidity of the ETF. If you're buying 1,000 units or 10,000 units or 50,000 units, the order book should have the concerned quantity and then only your order book will be executed. And don't forget about the limit price, because that will ensure that your transaction is happening at the correct levels. And this thing you should do while buying also and while selling also. Now, there are a couple of other nuances which you should also consider while shortlisting the right ETF. And the most important is expense ratio as well as the tracking error. So tracking error basically tells you how well your ETF is tracking the underlying index, because the objective of the ETF is to provide you returns which is similar to the underlying index. And the ETF which tracks the movement of the index in a better manner is the right product for you. So lower the tracking error, the better ETF is. And secondly, the expense ratio. Expense ratio is simply the cost which is charged by the AMC to run the concerned fund. ETFs in any way are very low cost investment vehicle. A Nifty 50 ETF typically has an expense ratio of 8 basis points, which is 0.08%. Just compare that with the regular plan or the direct plan of mutual funds, which is significantly higher. But still, you can look at the total expense ratio of the ETF just to be sure that you are picking the right fund from the expense ratio point of view also. But as I said earlier, typically most of the AMCs have ETFs which is round about similar expense ratios if you're talking about the broad-based products. Now this was about how you should trade an ETF. And the second point which we covered was how should you shortlist the ETF. Now also there's something which is known as the transaction and broking fees, which is involved when you're buying and selling the ETF. And this is the cost which you're paying to your own broker. And this cost basically becomes important because in case of ETF, you're buying and selling on the exchange. Higher the cost, lower will be the return of your investments, right? And similarly, lower the cost, higher will be the returns of your investment. So do check what your broker is charging in terms of the brokerage fee for an ETF. Because if you're buying and selling for a shorter horizon, then this cost can be significant. And lastly, as I mentioned in the very start, that investment objective of the ETF should align with your investment objective, and you should be aware about the risk involved in the concerned product. So one risk is obviously about the portfolio. If you're investing in a mid-cap ETF, that particular ETF will obviously carry the risk which is associated with the mid-cap segment. But secondly, for ETF, one more risk is about the liquidity risk, or whether the ETF which you're buying or selling is liquid enough or not, and whether the AMC through market maker is providing the liquidity at the right prices at all times. So while buying or selling ETF, just be sure about the AMC whose ETF you are buying, so that you are less concerned about the liquidity risk of an ETF while buying or selling. And you'll find a lot of AMCs have now tie-ups with market makers who provide these quotations on the exchanges at all times, and liquidity of ETF, especially in broad market ETFs, have improved significantly, but still it's always worthwhile to check for it. So these are the nuances which any investor should consider before buying or selling ETF. I hope this video helped in understanding these nuances, and do stay tuned for other videos on ETFs. That's it from me. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.